So the Fed day came and went. They have increased the federal funds rate with 75 basis points. Markets rallied. And we have a lot to cover. I haven't talked to you guys yesterday. This is Elliott with Cafe. I am your host, The Cowboy. And this is the chart of the day. Let's get started. All right, so Jay Powell came over at about 1 o'clock my time, and Chicago time here, and they announced the rate increases, with about 75 basis points. I think it was something that the market pretty much expected. This was a little bit telegraphed a few days ago in the Wall Street Journal. They came and delivered. And obviously he was asked during the press conference, well, what's going on with your credibility here, with your guidance? Should we trust you in what you're saying? Because you said it was only going to be 50 and now you delivered 75. And Jay Powell, did an about face and he tried to kind of save himself, saying again that this is, pretty much data dependent. They didn't know, how inflation is going to be for the month of May. And the data came in late and they had to adjust a little bit. And, they're not ruling anything past the July Fed meeting. Again, maybe a 50, maybe a 75, they will see. Initially, the stock market sold off, and then they rallied strongly into the close, and then they pulled back. So it was a pretty mixed market overall. But I think if you take the tone, maybe it was more of a positive than anything. But I still think, not fully convincing. There might be another leg lower that these markets could take. We'll take a look at the charts here. So, that's behind us for right now. And, now we're going to have some, some economic data maybe coming for the rest of the month. And then the next Fed meeting will be in July. Then the next one in September. Okay. So what happened? Dow rallied about 1%. The markets rallied in the beginning of the day, came down into the Fed meeting, and then, rallied up. Closed up about 1%. S&P 500 1.5, Nasdaq 2.5. So you notice the growth stocks, a little bit stronger today. This more, more technology and growth and stuff like that. There's no energy. There's no energy in the Nasdaq. So this is 2.5%. Then you're looking at the small caps here, fairly muted, 1%, and then 0.88. Nasdaq 100, 2.49, and then VIX kind of got taken to the woodshed as they killed the volatility. So as it's always the case, you have an increase in volatility prior to the Fed meeting. When they finished those discussions, the markets kind of pulled back on their risk event. They crushed the VIX. Markets usually rally on that. If you trade options, puts, and stuff like that, and those prices start to come down, and you can capture some of that premium, and buy stuff for lower price than what you sold them for. So it usually works out. Consumer discretionary, XLY, up 2.8%. And on the last places, here you see energy. This is a sector that I've been beating the drum on the short side. Down 2.2%. Oil was pretty weak on the day. Materials, consumer staple, utilities, all the defensive sectors moved towards the end of the pack. And then more of the, let's say, aggressive sectors, growth sectors in here, technology, XLY, real estate, communication. I mean, real estate is not really supposed to be there in terms of a risk on, but it found its place up in there. So maybe it's because the rates came down a little bit. I'm not sure. Anyway, financials in the middle. So mixed market, but overall with a little bit of a risk tone. Bonds. So bonds picked up a bit. They were kind of flat, as the meeting was kind of starting, and then the yield started to drop in here. You can see on the 30-year we're back to a 3.4, a 10-year 3.39, and then a little bit of a bigger drop in the 5-year, and the dollar also kind of took a little bit of a beating. It was quite a bit aggressive. I mean, we made new highs on the dollar index for the past week, and today they've really kind of taken it down. So I was talking to the members this morning for the pro video, and I was just kind of mentioning it could be some type of a fifth wave in here in the dollar. Still no confirmation yet, but if if they're taking the dollar down, we can start to look at emerging markets, and the risk rally in here. So things are getting a bit interesting. I think, and we're going to talk about this in a second, I think I'm going to stay with that kind of peak inflation narrative, with the dollar kind of correcting, inflation coming down, yields coming down, and markets taking a little bit of a pause in this extreme bearishness. So that's kind of what happened. Commodities, a little bit of a rally in gold. Here is oil, down 1.7%. It was even lower at some point, almost below 2%. So we have in the pro room several short positions in the oil via futures. That's something that we're pursuing in here quite aggressively. We had a short in natural gas. This one worked out beautifully. This was a really good trade that we took profits on yesterday. And then I'm not doing anything yet in corn and the agriculture field. I'm going to continue to kind of monitor that. But that's something that we've done. And let's see, crypto, Bitcoin pretty much flat on the day. You can see it went down and then it kind of came back up. What's interesting is that we failed to make a new low today in Bitcoin, which is interesting. And we kind of stopped. So far just a three-wave move in there. There might be some weakness still. But I think we're coming towards the kind of the end of this large sell-off that we've had, and maybe you can stabilize in some kind of a fourth wave formation or to begin some kind of a recovery. But that impulsive decline, I think it's kind of slowing down a little bit here. You can see Litecoin pretty strong, almost 8% on the day, and at least up to when this market kind of got closed here on stock charts, and then Tron. A little bit of a weakness and then rallied back strongly. So that's kind of what happened in just on a quick overview of the markets. Let's just take a look at the core. So dollar index still elevated in here in terms of the RSI. It's the top ranked in here, still looking pretty good. But again, I'm looking at this move out of here as possibly being a fifth wave. So I thought it was going to be here. We made one more high. I was watching the retracement here into the moving averages, but it really didn't hold, and we made one more high. But I still think that there is something cooking in the dollar. So I'm going to continue to keep it. And the reason I say that is because I think there's something happening with the European Central Bank, and a lot of this dollar strength is because of the yen as well. So, if the European Union starts to, the ECB starts to get more aggressive on the rate increases, and their narrative in there starts to change, they're going to close the gap between them and the dollar, and the dollar, and then that spread should narrow. The dollar should sell off. So I'm watching that again. DBE, high on my list of shorting. This is the energy ETF. Then DBC, same thing. I'll be talking about this coming back into some moving averages, but I think there is going to be opportunities to continue to short this WTIC. Here you go, short into the moving average. I'm going to try to take this all the way down to 110, 108. I've got a couple of contracts in the futures, looking down, I think in August and maybe even in September. GLD, nothing there, just kind of flat. Agriculture, flat. Triple Qs coming back. Russell will take a look at the counts. IFA, fine. Bonds, again, picking up a little bit of a steam here via TLT 20+ year Treasury. SPY stable, and then Bitcoin, a little bit stable after this big flush down from 30 to 20. Okay. All right, let's quickly run through these charts. 8 minutes in, so we're looking at the S&P 500, so fairly stable. I'm looking at this move corrective. We're going to take a look at the count there. Again, maybe one more drop and then a further recovery. But that's the, not much really has changed. So we haven't really flushed lower anymore. We've had a couple of gaps in here, and now we're trying to come back, right? It's, we're by far, we're not out of the woods just yet. We gotta take some of these highs, guys. We got to take some of these moving averages. There's a lot of damage that's been done to this market, and it's not going to, shoot up straight to the skies. We're in a big downtrend in here, and, the bears have the upper hand, and a lot of things have to happen here for this market to start to turn. But, we're counting, we're we have a couple of scenarios in here, and I'm watching this, and I'm trying to actively trade it, keep an eye on it, and see, what can be done here to at least, generate some income via some shorter term trades on the program. Nasdaq Composite, similar story. Dow Jones in here, no big movements since this big sell-off, just kind of stabilizing. Russell, this one did not make a big new low, but it's still up in there. And then Bitcoin coming back nicely from 20 to 21.6 or 21.7, whatever it is right now. It does look like maybe we're missing a fourth and a fifth to the downside before we can begin a recovery. But I've done a video this morning into the Bitcoin channel. Guys, I have a Bitcoin channel that's, darn cheap. It's $29. It's just Bitcoin. Charts, updates, videos every day. And, it's just a really low level entry if you want to just learn about Bitcoin counting and stuff like that. So, you're welcome to check that out. My pro room where I cover Bitcoin alts and, everything else, macro and all that, that's like $59 a month, $39 for a year. So listen, I don't think there's anybody that provides this much information, and I think quality information for this price. So, I think it's your loss, but give it a try. I mean, you might like it. So this is just a little plug there. This is TLT coming down, but I'm starting to like some bonds in here. I bought some 30, I bought some 10s. Nothing too aggressive just yet, but I'll show you a chart that says that bonds might start to outperform stocks in the near term. So that's something that I'm definitely keeping an eye on. Nothing on the yields. I don't want to talk about that. We've talked about it a couple of days ago. Here's the dollar. And then gold is a big beast that's pretty much flat. I have no interest in it at the moment. And then here is oil. That has pushed our short trade here in the profitability. So I'm watching this. We've gone short via puts in XLE, took profits on those, and now again I've got some shorts in the futures. EFA, these are the emerging markets here, the developed markets without the US and Canada. If you take a look at this formation in here, you can see this is starting to look interesting. Okay, so I would not necessarily be super bearish on this formation. And then VIX came back again from this big resistance. I think we've talked about a couple of days ago that if if there is a reason to sell VIX, that's the place to do it from. Let's see what's my next slide in here. Oh, I wanted to talk a little bit about this kind of old chart that kind of covers all the interesting things into the S&P 500. And here is so this is the 200-day moving average, the shaded area in here. You drop back into the 200-day. This is a chart from Grayson Rose from Stock Charts. He kind of created this one, so kudos to him on this. Very interesting because he just kind of puts together everything that's interesting about the S&P 500. So you see below the 50, the 200 is the shaded area. So as long as you're in this territory, that's the danger part. You want to be above it, obviously, to be in a big bull trend. So we're still trading negative in here, and we need to overtake that. Still, percentage of stocks above their 200-day moving average is still very low at about 18% at the moment. We wanted to see divergence as this market moves lower, these things to start to improve. Give me something that I can, say that, yeah, some big lows are in place. So far, nothing there just yet. So we're going to monitor that. It starts with the 20, then they move to 50, then they move to 200. So I don't have the 50 in here. I'm going to take a look at that maybe in a different video, but we might have some divergence on there, but I don't think so. Now, here is the spread between the consumer discretionary and the staples. When this line goes down, right, people are defensive, they're buying staples. When this line goes up, people are starting to move towards risk on, and they're starting to be more bullish, and they're starting to take more risk. Now, check out the divergence in here. You can see how, very nicely in here, even if the stock market drops down, the S&P 500 drops down, people are not buying a safety anymore, right? So I'm starting to get a little bit of a hint here that things are shifting underneath the surface in terms of discretionary and staples. So I wanted to see this line continue to go. I mean, listen, it's still in a downtrend in here, okay? But the fact that the market's made a new low and people, are not buying staples anymore, but rather starting to look into this discretionary stuff, that means a little appetite for risk coming into the market underneath the surface in here. So that's very important. That's a similar story happening with growth versus value. When this line goes down, right, growth gets sold, people buy value, whatever, energy, the stuff that gives you yield, things of that nature. This line is not going down anymore. It made a higher low in here. So that's interesting, okay? Keep an eye on that. Again, high beta versus low volatility. When this goes down, people fly to safety. They get into low volatility stocks. I don't know, talking McDonald's, healthcare stuff that doesn't move that crazy. When they want to pick up more risk, right, they're going to start to buy stuff that's a little bit riskier out there on the risk curve, and stocks that move 5-6% a day, whatever. It's high beta, and then they drop the low volatility. So that's a divergence as well. They're looking a little bit at the momentum factors as well in there. That's interesting. So, and then the rest is some small caps and stuff like that. I'm not going to go through it at the moment. But that's something that I wanted to, kind of show you what's going on underneath the surface in some of these ratios. Okay. Then the other thing is here. This is the spread between, it's a ratio between the total stock market, right? This includes everything in the stocks. So that's the VDI, Vanguard Total Stock Market ETF, and the iShares US Aggregate Bond. So this is stocks versus bonds. When this line goes up, people buy stocks, and bonds, are not in favor. When this line goes down, every once in a while, when you're looking for safety, during crashes, you're starting to buy bonds. Now, this doesn't mean necessarily, they can move at the same kind of a rate, right, when they kind of go flat, but starting to have an exposure to bonds versus stocks in here might not be a bad idea. The yields are really good, right? You look at the 30, you look at the 2s, you look at the 5, you look at the 10s, right? They're above 3.5, so you're starting to get decent yield on those. They start to slow down on their sell-off, and starting to add bonds to the portfolio might not be a bad idea. They've been selling off pretty big here. So this line coming back below the 50-day moving, or the 50-week moving average starts to suggest that there might be, some flight into safety. Doesn't necessarily mean that, that the stocks will continue to crash, but that the bonds might outperform here for a little bit. So just kind of keep an eye on that. That's something I wanted to pay attention to. Bonds are not as scary as people think, and they might not be that excited, but come in the futures, and if you trade futures on the bond market there, it can get pretty interesting, and things are definitely moving. So I would not put them on the side. Okay, really quickly, I wanted to touch on the consumer price index here, right? 8.5, 8.7, whatever it was. Here is the Fed Fund futures, 75 basis points. But now, so it was 75 to 100. Now we're at about 175 on this latest move, right? So this is what's going on right now. This gap in here needs to get closed off, okay? And that's why they're getting so aggressive. Look how far we are between, let's say that even if this one is moving higher like that, right? This line in here was whatever it happened back in December 2018 when they hit, I think, 2.4 or 2.2 or something. So right now we're at about 175 with another 75 going in next month. We're going to get at 250. So we're going to reach back in here, okay, on the Fed Fund futures. Now watch this trend line as well. I've been talking about this, right? So that's this is where we are right now. They're going to try to squeeze this higher and do one more rate hike in July. We'll see what's going to happen with the economy going forward. We're going to get data. But the idea here is that this has to drop. Okay, this has to drop lower in terms of inflation. So that's why they're, so either this comes or they're going aggressive higher. They're trying to kill this thing, okay, and make it do something like that. But I tell you, when this thing starts dropping, if you look at the past, it's going to drop fast, and watch out for commodities, watch out for a lot of stuff here when this inflation peaks and it starts to show signs that it's coming lower. I think we're going to get a nice flight into risk. So just showing you that in there. And then the last thing in here, you're probably familiar with this chart. This is, the rate high cycles going back 1994, 1990, and then you can see in the orange areas in here, every time the Fed began a hiking cycle, the markets continue to push higher. Now, in none of the scenarios we really had inflation as we're having right now. So this time might be different. But I think it's something to pay attention to, because the markets here are selling off. I'm in orange, right? They continue to sell off. And even before they sold off for a little bit, right after they kind of started to hike, you see that in all the cycles here, the stocks started to sell off a little bit, but then they started to rally. and rip higher during the hiking cycle. I don't see any stocks moving higher, right? We're actually moving lower. So again, it might be different, but something to kind of keep an eye, because previously the market continued to push higher. And then when they started to cut rates, then that's when you had the sell-offs in the market. So watch that. I think it's something interesting. Okay, enough about this. Let's go over and take a look at some of the counts. I'm going to start with the S&P 500. I've touched on some of these yesterday. There's a couple of counts in here, and I'm not going to dissect this too much, but this could be a fourth wave in here, or it could be a second, the larger degree. This could be a 1, it could be a 2. If it's a 5, so if it's a 2 in here, that still may be in progress. We still might have some time to go, and then we're pushing higher in a third. If this was a fifth wave, then this has to be impulsive and start to crash the market at least back here to 2200. Right? That's the idea when you have like a big fifth wave at the larger scale. So far this market is still grinding lower in some type of a corrective structure, and we've looked at this a couple of times, counting it as an ABC, then with the new low, still makes sense as a corrective move as a WXY, because I don't see, big impulse here just yet where you go 1, 2, 3, you don't have the proper structure 3, 4, and 5. I was entertaining maybe a leading diagonal that's not really looking good, at least not in the S&P 500, maybe in the NASDAQ. So this is kind of what we're watching now. We're watching a WABC right in there, pretty impulsive move, up in B, down in C, then up in A, down in B, up in C. Back to the prior B wave, which usually wave X usually stops right there, or a little bit higher. So now you got another impulse here, right? You go in an A, then you get a flat in B, and here in an A, B, C for a flat. Now you're dropping down in C in a 1, 2, 3, maybe it's a fourth, and a final move in C in here. This is a little trick. I don't know if I talked to you guys or the guys in the program, but go ahead and connect from the origin of the move. First time, because you're not going to know where this is, you connect to the X wave, and then that gives you the lower boundaries. If you're starting to break those lower boundaries, then you go to the next wave, to the B wave of the second leg, and that gives you the line below. And usually that's where the market stops. So here is where we are right now at the lower boundaries. We might get a bit of a rally in here. And on the lower time frame, it looks kind of like this, right? So that's that flat, 3, ABC in 3, 1, 2, 3, 4 up, and 5 for C wave. So 3, 3, 5 for a flat, then 1, flat in 2, 1, 2, 1, 2, large 3, 4, and 5, and we might need another 4 and another 5. That's what I'm thinking. The higher this goes, right, the less likely is that it's going to be a fourth anymore, and possibly I might have to secure the end of the move right in there. So we'll see. I'm going to monitor it in the program. We'll see what happens, and we'll act accordingly on there. Again, I'm not really ready to push longs, not just yet. Okay, NASDAQ, really quickly, 22 minutes. Sorry about this. Let me go back here. So either a leading diagonal here, 1, 2, 3, 4, and 5. We'll monitor for this, or if I have it here in my, let me see what is in my alternate. Okay, so right here, right, same thing, A, B, C. So impulse 1, 2, 3, 4, 5 for A, B, diagonal in C of W, back in X to the prior B wave, then impulse in A, flat in B, down in a short C, or maybe a slightly push lower one more time. Okay, something like that. Now what's interesting in here is this, that we are, sorry about that, let me go to this. So this is the count. Look at the trend line, right? I mean, this correction is coming very, very close to some of these levels in here, right? You got that. You got, I'm not going to keep doing boxes, but you got a trend line right there. You kind of know the touches right there as well. So interesting levels that the market is coming in that in a long-term uptrend. So again, if that's a 1, 2, 1, 2, right, we're looking to rip to the upside over the next few years. Still could be in a big, secular bull market in here. If this was some kind of a fifth wave, then obviously, we would be wrong below this level. That would be the invalidation level. And do I have my marker right there? Right there. 6,616. That would be the level where obviously this wave 2 will get invalidated. But I don't have to wait until then to kind of, say that this is not a wave 2 anymore, because it's going to start to shape up in a more of an awkward structure. So that's kind of what I'm watching in in the Nasdaq. Okay, so we'll see what happens in here. And again, with kind of what we saw with a little bit of underlying strength, listen, people are super bearish, man. And it's like, it's the end of the world. I don't know. I never like to be too bearish, but people accuse me that I'm being too bullish in crypto and in a lot of stuff. Yeah, because I'm an optimist and I like things to go up and not necessarily go down. But I'm not a big shorter. Only when I smell, blood in the water, I would short. But anyway, that's the idea. I think it's, I like things from the bullish side a little bit more than I like them from the bearish side. It's just because it's better for everybody. U.S. oil in here. So this is the count. Let me go back to the WC count. So we were looking for a completion of this fifth wave out of 5, either that or a B wave, right? We got both of them kind of working. This is the move in here. So 1, 2, 3, 4, 1, 2, 3, 4, and 5 over 5, and then maybe look back towards some 93 targets. And the move on the smaller time frame looks kind of like this, and that's why we shorted it, based on the structure coming up in a 1, 2, 3, 4, and 5. And so far we're reacting lower, just a 3 wave. If something kind of morphs up and we're starting to kind of climb back above 123, then I'm going to pull back and just let it do its thing before I reshort it. But for right now, our shorts look pretty good, and I'm going to try to stay with them until about 111, maybe even 106, 107, down into this neighborhood in the oil market. So that's where I'm at. And then nothing on gold, but on natural gas, you probably haven't seen this. I don't know if I've showed you guys what's going on with this. Something messed up. I got to fix that. But this was the count that we've had. And let me see in here. Yeah, and I was targeting back in here. I mean, we shorted it a little bit early, but you could kind of see what's going on in, even as a divergence. I mean, I'm just going to kind of show it to you really quickly. If I can pull it. Let me pull the screen lower. So you will see it right in here, right? I mean, look at that. Look, as the market was going, higher like that, right? And, I mean, look at the RSI. So when you see these types of moves and you're going up at the lower and lower rate, after you already had a big third wave in here, maybe followed by a flat, that's a big signal for a short. So, we took this market and we got out for now. But there might be in here, I'm not going to go to a small time frame, but there might be, a fourth forming and maybe a fifth, which will give me a license to short again after a B wave higher back into this trend line. So people are, kind of crazy about energy, this and that and the other. Listen, watch the counts, because, there's a lot of narratives and everybody pushes all kind of stuff. But usually, the Elliott wave is kind of correct on things. And sometimes it isn't. But when it isn't, then you just have to step to the sideline and think about it. Look in the mirror and just say, what the hell? What's wrong with you? What's going on in here? You're not counting right. Go back to the drawing board, doubt the methodology, and all the things that kind of go through the mind of an Elliott wave trader. But then, if you've used it long enough, it's working and it's extremely valuable on the roadmaps. And, combine that with some, let's say, strong psychology and sentiment reading, it could lead to pretty decent results. So, guys, thanks for watching as always. Don't forget to visit me in the Pro Room again. It's one of the cheapest in the internet with a lot of information. And give me some thumbs up, a like if you want, and I'll see you on the next one. I don't think I'm going to do anything tomorrow. Tomorrow is Thursday. I know I've reduced the pace of this videos a little bit in here. I think I've kind of got a little bit exhausted and just too much information. So I might just slow down a little bit, but still try to put, maybe 2 videos a week out there about what's going on in the markets. But if you want to see more, come and visit me. We're every day active, 5:30 in the morning, all the way till the afternoon. Actually, after I'm finishing this up, I'm going to go up and do a video for the altcoins and see what's going on in that land, because that's a messed up one. So thanks for watching again, and I'll talk to you later. Hey, and I stayed under 30 minutes. Kudos. Bye, guys.